Hello and welcome to the Retire to a Life You Love podcast with your host, Michelle Gessner. I'm Wendy McConnell. Hi, Michelle. How are we doing today?
Hey, Wendy. Everything's good. We are almost through the year 2024. And by the time our listeners are listening to this, I'm sure it's going to be January.
Shiny, happy new year, right?
Absolutely.
Okay. So today we're actually going to be talking about what questions you need to go over when you're looking for an advisor. Do I have that right, Michelle?
You do.
Okay. So there's quite a few of these. There's about 8 questions, and I'm going to interview you. How about that?
I love it. Interview away.
All right, here we go. So I want to know that anything that you recommend to me, is that going to truly be in my best interest?
Yeah. So for our listeners, we're going to have the list of these questions that Wendy's going to put me through. And these questions will be available for you to download so that if you decide to shop around for an advisor, you know what to ask. And and I'm going to answer the questions, myself, so you can, in case you're wondering where we stand on these questions. But yeah, whether you're looking to work with me or somebody else, these are good questions to ask. So, okay, now I interrupted you, Wendy, so you're going to have to ask the question again. I've already forgotten what it is.
Well, I want to know that when you are recommending something to me, is that truly in my best interest?
Okay, perfect and important question. So what you're asking is, am I giving fiduciary level advice, which is legally, I'm obligated to give you advice that is in your best interest, not necessarily what's good for my firm or what's good for me. It's about what is best for you, the client. And that's the term fiduciary. So you're asking if I'm a fiduciary in the investment world. And that is an important question. And as I said, it's legal obligation. So where we stand on that, I am a Series 65 advisor, which is the fiduciary level advice license. And just to make this confusing, I don't want to make it confusing, but it just is. So I need to clarify. An advisor can hold the Series 65 and the lower standard license, which is the Series 7 or 6, which means they only have to give advice that is suitable for you, but not necessarily in your best interest. So it's confusing because an advisor can have both and switch back and forth depending on what type of account they're giving advice on. And that's confusing for the consumer. In my firm, we are all simply Series 65. That's it. We've dropped the other licenses. Our investment advice has to be legally in your best interest. And just to add a further complexity to this, we're simply right now talking about investment advice. So these are things that are classified as investments by the SEC and FINRA and all the regulatory bodies. Well, the regulatory bodies do not concern themselves with things that are not investments. So if your advisor has a Series 65, and they may have, but they're not giving you investment advice, maybe they're talking to you about insurance or something that is not considered an investment by the regulatory bodies, well, then they don't have to give you best interest level advice because that's outside the purview of these regulatory bodies. So if you want best interest standard level advice on everything, you need to have an advisor who's also a CFP, Certified Financial Planner, because now the Certified Financial Planning Board is overseeing people who are CFPs. They're not a regulatory body. It's a private organization. But to hold those marks, the advisor has to give fiduciary level advice on all advice that's financial, whether it's regulated by the bodies or not. So all of this to say that you'll want an advisor, if you want someone who's going to give you best interest standard advice on everything, you will want someone who has a Series 65 for the investments and who is a CFP for all advice.
Is that something that would be hard to find?
No. I mean, okay. CFPs, okay, it's a subset of the advisors. I mean, most advisors are not CFPs. So in that respect, that does narrow your choices. But there's quite a few CFPs out there. And then if you're looking for a CFP who strictly maintains the Series 65, that's a further subset. So yes, you are limiting your choices a little bit. I don't know what the statistics are, but you can find people who meet those standards.
Okay. So your recommendations, will they be primarily focused in one area, or will they be comprehensive in nature? So what I mean is, will I need to find another advisor for advice in other areas?
Another great question. So you're asking, what are you going to advise me on? Is it strictly going to be investments, or is it going to be in other areas? Now, the vast majority of advisors out there are strictly giving advice on investments. And if that's what you want and that's what you need and you don't need anything else, that's fine. Most advisors, I don't know what the percentages are. The last time I checked, it was like 95%. Most advisors are strictly investment advisors, and that's it. When you are dealing with someone who gives comprehensive financial planning advice, which is our firm, they are not just talking about investments and looking at your investments, which are obviously an important part of your financial life, but they're also looking at other pieces of your financial picture, such as risk management and estate planning and tax planning. Those are all important pieces too that affect your investments, and they're all interrelated. But you need to know that not everybody is doing all of that. So you'll want to ask what they're actually going to be giving you advice on. Now, I do want to clarify that an investment advisor will say often, and this is the confusing part for the consumer, they'll say, oh yeah, we do a financial plan. Now, a financial plan is not a consistent term across firms. So what they call a financial plan may not be what we call a financial plan. Sometimes an advisor will say they do a financial plan when really all they're doing is a projection using what's called Monte Carlo analysis. So they're looking at the probability of your money projected over many years for the rest of your life, for example, using different return scenarios. But that is not a financial plan. Even though they might call it a financial plan, that's not a financial plan in my definition. A financial plan is perhaps using a Monte Carlo analysis and looking at different investment returns over the next number of years of your life, but they're also looking at taxes, and they're looking at inflation, and they're looking at when you spend money one year but not another, because maybe you have to repair your roof one year, but next year you don't need to repair your roof. So there's different cash flow scenarios, and taxes may go up, or they, may not stay the same. So a true comprehensive financial plan is much more than a Monte Carlo projection.
So it's fair to ask them their definition of a financial plan.
Yes. What is their definition of a financial plan? And, they may be surprised that you're asking that question because, it may not be something that they're asked too often, but have them explain it.
How about the knowledge and expertise necessary to successfully navigate the complicated financial planning and tax world to achieve my financial goals?
So what you're asking here is, what's my level of expertise? What's my level of knowledge? What credentials do I hold? And that's something you'll want to ask when you're interviewing different advisors. So in my case, I have 13 years in the industry. I have been a CFP since 2018. So what is that going on? 5 years, 6 years? Do the math.
About 7 or 8 years.
Right. And so what is a CFP? That's someone who has experience, took several courses. I think that it's up to 6 or 7, and passed a 6-hour exam that has a very low pass rate. So that's what a CFP is. And again, as I said in the opening part of this episode, they're overseen by the CFP board to give fiduciary level advice on all financial advice. So yes, I hold that. Many do not. So if that's important to you, you'll want to ask about that. I am not a lawyer. I am not a tax advisor, but we do interface with other professionals, and we bring other professionals in so that you're getting advice on all of the areas of your plan. We consider ourselves the general manager, if you will, of all of these different areas of expertise.
So, Michelle, When considering you as my advisor,
Mhm.
how many clients do you serve and how does their situation compare to mine?
Okay, good question. So yeah, as someone who's looking for an advisor, you want to know if they're used to working with folks that have a similar situation as yours. Um, so in my case, we intentionally keep the firm small. In other words, we're not trying to have a revolving door of clients with thousands of clients where we barely know their name. And we do keep about 40 households. Now, we are still accepting new clients and we can grow to a little bit more, but the idea is we want to keep the number of client households that we manage relatively small because we want to be able to give high touch, white glove, fiduciary level, and comprehensive planning. So you'll want to ask how many clients is somebody managing? I would say probably not more than say 80 or 90 per advisor, because over and above that, it's going to be really hard to do those things. Um, Now, also in our practice, we are dealing with folks who are getting ready to retire, whether they're 5 years out, maybe 10 years out, or closer than that. Some of our clients are already in retirement. So that's who we typically work with. And you'll want to ask that question because maybe you'll want someone who works with a different type of clientele to be more like yours, because then that advisor will have more practice and more experience dealing with problems that are common to your demographic and your stage in life.
So, how often will I hear from you if you're my advisor?
Yeah, you'll want to know how often you're going to hear from this advisor. I've heard and read about reasons why people don't want to work with their advisor anymore, why they get fired, why advisors are not maintained by a client. And that's number one on the list is they don't hear from their advisors often enough. So this is an important question. Now, in our case, we're reaching out to our clients on a monthly basis. We do quarterly commentary, we do quarterly touches, we do annual investment reviews and annual financial planning updates. But that doesn't mean that we can't do them more often. Most of our clients don't want them more often, but that's generally what what works for our clients. We do not limit the number of times that you can reach out to us and talk to us. I mean, there might be something that comes up. I have a client household just the other day. I was helping them with a huge financial transaction. They're about to buy a new house and it's outside of their, annual update and things like that. That's okay. Because this is a real life. Real life doesn't conform to a schedule. But do ask that question.
So, what will my total investment expense be? Like, how much are you going to be compensated, and where will I be able to see that in writing?
Yeah. So investment expenses are top on the list for, hey, what do you charge? What can I expect? How are you compensated? So it's an important question as well. In our case, we are paid the typical assets under management fee, which is otherwise known as the investment management fee. This is by law required to be in writing. So it's going to be in your investment advisory agreement. In our case, we're charging about 25 basis points per quarter on average. Now, if you're not familiar with a basis point, that's 1/4%. For some of our clients, they're going to pay a little bit more because they have less assets under management. So they may pay 0.3125%, which is 31 1/4 basis points. And they're paying that per quarter. So it adds up to be about 1 to 1.25% per year. So that's what we charge. And it goes down from there. If you have more assets under management, the amount goes down. So that's what we charge, but that's not the end of the story. There's also an expense ratio. So your investment securities, mutual funds, ETFs, those have an expense ratio. And what that means is the fund itself has a charge that comes out of the return before the return is even posted. So if you have expensive holdings, that is part of the equation. That's part of the expense that you will pay. It's not going to be a line item on your statement, but it's an expense. So you'll want to know if your advisor is using high expense securities or not. If if you are using individual stocks, there's no expense ratio, so there's no internal expense. Another thing I want to point out, so the combination of those two things, that's your total fee, your total expense. One is going to be a line item on your statement every quarter or however often they bill. Some bill monthly, we bill quarterly. And the other is not going to be on any statement. It's you can find it in the prospectus of your investment fund, but you want to know what kind of expense on average does your advisor use for investments. Now, I want to put this in perspective. The market itself will fluctuate on a daily basis by about 0.5%. So if you think about that, and let's use our typical fee, which is about 0.25%. So we're charging about 0.25% on average per quarter, or 1% per year, and the market is fluctuating daily by about 0.5%. This is under the average. The average expense is more than that, with the combination of the internal expenses and the management fee. So I would not say we're the cheapest in town, but we are definitely much less than the average expense out there. And we're using a combination of active and passive funds, and some are very inexpensive and some have a little higher expense ratio because there's a lot more active management that's involved. So it just depends. I'm not suggesting that all securities should be rock bottom zero cost, because some of them are a little more specialty and there's a cost for that. You can't just find them anywhere. But I am telling you that it is part of the equation that should be looked at. Now, I have more to say on this topic because this is a very important topic. I mean, cost is looked at, and people want to know what they're paying. And of course, value is important. So what do they say? Things are expensive in the absence of value, and things are not expensive when they have value. So you got to ask yourself, and I always like to tell people, there are 3 questions that you should ask yourself when you're trying to determine if this is worth the money that you're about to pay this advisor. So here are the 3 questions that I suggest that you ask. And a yes answer to any one of these questions would justify the expense. So here's question number 1. Can this advisor and their professional team, can they do a better job in getting better investment returns than you can do on your own over the life of your investments by at least the amount that they're charging? So in our case, we're charging, what did I say, about 1% per year, right? Billed at 25 basis points per quarter. So 1% per year. So can we do 1% better in returns than you could do on your own? Now, that's going to be hard to quantify because how would you set that up? But just to kind of understand that in your mind, look, 1% is not a lot to beat when you're talking about someone who's not using a professional team of managers that understand what correlation is, that understand what diversification is, that make good decisions. But, if you feel like, hey, all they have to do is beat what I do by 1% a year, then it's worth it. That's how you put that in perspective. I have another question to ask yourself. Can your advisor and the team that is helping you, can they help you avoid costly mistakes that would have cost you at least the 1% of your returns in that given year? That's a big one. And that's, again, hard to quantify. But I think from the research that I've read, that right there is the biggest value of a professional and fiduciary advisor. They talk you off the ledge. They keep you from doing things that will hurt you when it comes to your investments, when it comes to other advice they may be giving you. So that one's a big one. So a yes answer there would justify that cost. The third one, which is, again, hard to quantify, but something you should ask yourself, is can that advisor save you time, effort, maybe some anguish in not having to do this by yourself, not having to do it at all. If they are good at what they're doing this for you. They're managing your investments at a professional level. And can that absence of effort and time, what is your time and effort worth? Is it worth at least that 1% of your returns in that given year? So for some people, the answer is yes, yes, and yes. For some people, it's just one yes and maybe two no's. Any one yes is how you would tell yourself and answer the question, yes, it's worth it.
So are you going to help me solve any and all financial problems that I encounter?
Is this another question, Wendy, or are we?
Yes, I am interviewing you. I would like to know what is going to happen after this podcast.
Yeah. So if you hire me, you're asking, will you help me solve any and all financial problems? All right. So here's my answer. It's a good question. My answer is I stay away from any and all because that's a very broad and all-inclusive, question.
Can you get my grocery bill down?
I might not be able to get your grocery bill down, but what I can do, if you're talking to me personally and my team, we work on helping you with your 401k. We work on helping you if you, God forbid, are under an IRS audit, and you need to understand how to get some things. Maybe someone died in the family. Maybe you have, you're trying to understand what your disability policy at work means. That's a big one because those are very misunderstood. Maybe there's a tax issue. Now, we're not tax preparers. We're not going to prepare your tax return, but we can help you with some tax planning, with some tax issues, or get you to the right person if we can't. Real estate transactions. I was just mentioning a client of mine was buying a house and they're getting quotes from mortgage brokers and they needed another pair of eyes to kind of sift through some of this. So we help with that. Debt, what's the best way to get some of your debt paid off? Social Security filing strategies is a big one. Medicare decisions. Now, I am not a Medicare expert, but I have a Medicare expert and she's very trustworthy. And we will help interface with that person so that you're not by yourself. Employee benefits, I kind of mentioned that already with the disability policy, but helping my client choose employee benefits at work, because sometimes it's hard to understand what's best. College planning, making gifts, so, and I don't know if I mentioned estate planning. Estate planning, we are not attorneys. We're not going to draft your documents. But what we do is interface with your attorney. And I actually want to give an example here because that one is maybe a little murkier to folks. Like, what do you mean you help with estate planning? There was a client of mine. So let me just start out by saying, when I say we help with estate planning, we are there on the team to act primarily as translator, because the attorney will ask a question that you may not understand, but you don't know that you don't understand. And the attorney doesn't know that you don't understand. So you give a wrong answer or you give an incomplete answer, and the attorney does not know that. And so then they give recommendations and they draft documents that leave out some of the important picture. So that's what I mean when I say translator. On the other side, let's say the documents are all drafted and ready to go, your trust, your will, all of that stuff. We help with the implementation. And the attorney does not do that. Most attorneys do not do that. They will collect their fee, give you your documents, and wish you on your way. And they may not even follow up with you over the years, even when legislation changes that would require that they change your documents. We had that in with the Secure Act. So what we do on the implementation is we take your documents and we help execute what that document requires. Maybe your trust needs to be funded. If it's not funded, it's not worth the paper it's written on. Maybe your beneficiary designations need to be changed, because if they're not, those prevail over anything that's in the will and the trust. So if you don't do that right, your will and trust, again, are not worth the paper they're written on. So we are very helpful and stay involved with the implementation of your plan. We also help with helping you know what questions to ask your attorney. So we stay on the team there. Now, the example I wanted to give you. So we have a client who was getting their documents together, and they went to an attorney of their choice, and they did all this without involving us, which is perfectly fine. But here's what happened. The attorney drafted the documents. We were not involved at all. I didn't even know about it. And once the documents are drafted, that was when I was brought in by the client to look them over. And what I saw was something that did not make sense for this client at all. What I saw was that this client was given a will, and in the will, the lawyer had what's called a testamentary trust. So once the client passed away, all of their IRA money would go to the other spouse, but within a trust. So a trust would have to be drawn up at that time, and the IRA would be fed to the other spouse, the surviving spouse, through the trust. Now, there are reasons to do that, and the primary reason is to set rules and boundaries for how that money can and cannot be spent. And in this case, there was it's a second marriage, and they wanted to make sure the children were allowed money and this and that. So they had their reasons. But what was left out of the discussion, and I'm not sure if it was just left out or there was some miscommunication. I was not involved to know. But what I brought up at this point is, hey, if the money is being fed to the trust, to this IRA is being fed to this trust, well, now that money has to be completely spent and that account emptied by the 10th year after the death of the spouse. So that means it's a tax event by the 10th year, for sure, if not sooner. And you're giving up the really good and advantageous tax treatment that still exists today only for spouses of IRAs. So in other words, you're sacrificing your tax treatment. Is that what you really want to do? So when I brought that point up, the attorney, I don't know how this was overlooked. Again, I don't know what was said and what was not said, but the attorney decided, hey, yeah, this is not a good thing. Let's not use a testamentary trust for the spouse because they're giving up their wonderful stretch IRA treatment that only spouses have now after the Secure Act was passed. So that's just an example how it's best to have a team. We all have our areas of expertise. And when you have a team approach, everybody's on the same page and everybody's got their own perspective and it works together primarily for the benefit of the client.
Okay. So finally, I want to know, where's my money and how can I see it?
Yeah. Where's my money and how can I see it? Are you making off with my money if I hire you? Yeah. Is that really what you want to ask? Yeah. So what you're asking is, where's my money stored? Is it stored in your firm? Is it stored at a custodian like Schwab or Fidelity or one of those? Where is it? And how much access am I going to get to my own money? And that is absolutely an important question. There's all kinds of really good custodians out there. Some work strictly with investment advisors and others work with the general public. You know, I'm sure everybody's heard of Schwab and Fidelity. They work with both regular retail clients as well as institutional clients like a professional advisor. We use Schwab as the custodian of our clients' money. So Schwab holds your money. You have 24/7 access to your money. And Schwab does all the reporting to the IRS. Your advisor, ourselves, do not do that. So why do you care about that? Because it provides checks and balances. To give you an example, Bernie Madoff, he did not use an external custodian. He was the custodian and the advisor. So he doctored up and put together your statement. So he could falsify the statement, and that's exactly what he did. No checks and balances. So I tell folks that you definitely, if you want those checks and balances, and why wouldn't you, that it's best to use an advisor who has a separate custodian for your money. And the other point I want to make is the custodian will also have a security guarantee. I know Schwab and Fidelity both do. So that means that if there is a cyber event, a cyber theft event, Schwab and Fidelity both have a huge amount of security guarantees to make that client whole if that were to happen. So good question, important question. All of these are important questions to ask. Do you have any others, or did we get through all 8 of them?
Do I get a toaster if I sign on with you?
You do not get a toaster.
Oh, nuts.
Yeah, we're just not into the salesy things like that. But yeah, very important questions. I encourage our listeners, if you are trying to figure out who to trust, who to hire, these are questions that are universal that you can ask when you're interviewing different folks. And these are obviously how we answer those questions. We will make sure that this list of questions is available to you on the show notes so that you can keep them handy for yourself when you're trying to choose your next advisor.
Okay. So Michelle, if people have more questions, how do they get in touch with you?
Yeah. So the best and easiest way to reach us is through the website, GessnerWealthStrategies.com.
All right. Well, thank you very much. And thank you for joining us today. Please like, follow, and share this podcast with your friends. Until next time, I'm Wendy McConnell.
Thank you for listening to Retire to a Life You Love with Michelle Gessner from Gessner Wealth Strategies. We hope you were inspired to take steps to your financial freedom as you learned new techniques and strategies for managing your finances. To learn more about how you can improve your financial landscape, visit our website at www.gessnerwealthstrategies.com. That's GESSNER wealthstrategies.com. Or give Michelle and her team a call at 713-589-6448. And don't forget to click the follow button below to be notified when new episodes are available. The information covered and posted represents the views and opinions of the guest and does not necessarily represent the views or opinions of Michelle Gessner or Gessner Wealth Strategies. The content has been made available for informational and educational purposes only and is not intended to be a substitute for professional investing advice. Always seek the advice of your financial advisor or other qualified financial service provider with any questions you may have regarding your investment planning.